rapid digitization, to move to the edge, AI, and all these mega trends that we just talked about, they're creating significant capital needs both in the traditional VC markets and also the edge markets, as everyone knows, talks about. Can you talk about the evolving needs and what does that mean in terms of investment into digital infrastructure going forward?
Thank you. And we are by origin an Australia, New Zealand infrastructure investment manager. I particularly like the video at the front end for two reasons. One, it made me realize I really have to upgrade my home TV, because this looks pretty impressive. The other one was that I think some of the statements that were made within that video really resonate with our investment purpose. So we say we invest wisely in ideas that matter, which means we look at where are there societal issues, how can we drive prosperity, what are areas of infrastructure where we can see multi-decade capital needs, and we try to identify those early. One of which was digital infrastructure. So we started investing in digital about 10 years ago, and then we've invested over the last decade about $9 billion in across the globe, so Australia, New Zealand, Europe that I'm heading up, and then North America, in fiber network companies, in integrated telco, and in data centers, where we have a large business in Australia, currently building out to 300 megawatts called CDC. And then we've also invested in Europe in a business called KO Data, which was originally more focused on high performance compute AI, sitting in the innovation corridor between Cambridge and London. But then has branched out based on that, call it best-in-class high performance use case, into financial services, tier 2 hyperscale, and system integrators. So a little bit of a narrative there before kind of going into your question. And what I'll try to do, that was interesting panel speakers earlier, but I'll try to add a bit of the flavor of the investment side of things in the dialogue we're having with our investor base, which is mainly large pension funds, superannuation funds, insurance companies. In terms of trends and how the, I call it the ecosystem is shaping up, at the higher level I'm bullish, and we heard this morning, if you look at the trends, there's still huge and continued growth in data, storage, connectivity, compute, so that will keep going, which means tier 1 markets continue to grow. Being in certain areas constrained, so pushing out into tier 2, which is interesting. I think on that thematic, we see the edge, which is ultimately driven not only by constraints in tier 1, but even more by use cases. We see those use cases starting to develop. If you think about metro edge, gaming, content delivery, video streaming. But then if you look at the further development of edge and even micro edge, there's exciting things coming. Think about augmented reality, virtual reality, connected medical devices, autonomous driving. So there's a lot to come and a lot of growth to develop. AI is another interesting one, and I mentioned our business in London area, KO Data. They're quite advanced in that area, which made me open my eyes, was not only that, but if I hear back home, if I hear my kids talking about, oh Dad, we've got this great application, I ask it to write an essay in Spanish, I run it through Google Translate, so the school won't recognize what I've done. It kind of made me realize you go from AI was something of the future, it's moved into something I think that is going mainstream, and it's not about will we use it, but more how will we use it, so we'll see a massive ramp up in that. So those are some examples, a couple of others from why I'm bullish on the opportunity set here. We see, well, increasing, it was earlier as well, on-premise going off-premise for different reasons, being able to tap into best-in-class technology. But also we see PUE as a more and more driver there, where they're sitting on very old legacy facilities, too high energy consumption. So those are some kind of things we're observing. And bridging that into the capital side, interesting for me to see, I mean, that growth brings a huge capital need. Some businesses that have been successful in terms of, if you get the large end of town, hyperscale, I've had various conversations not too long ago, and our Australia-New Zealand business focuses on that segment predominantly, but they win really large projects, but then they actually have to finance it, and it's not always self-evident where that capital is coming from. So that's more at the, call it, contracted, mature end of town. But from there, you've got a whole scale of different investment options going, more higher risk, more tapping into that HPC, AI, tier 2, tier 3, edge, micro edge. So there's a lot to come, and investor appetite is warming up, is what we observe. 3 years ago, data centers were a bit scary for pension funds. Now they've started adopting it, understand it, look at the long-term contracted propositions that they like, but still there's often players that have not invested yet, but are ramping up appetite. So I think from the capital side, there's an element of education if we talk about the large numbers that are needed to build out further. So a little bit of a narrative here, but I'll stop talking here. But it gives a little, some context of what we're seeing from an investor.
Yeah, very helpful. So what I would suggest, actually, when everyone starts speaking, please, introduce yourself as well. But I'll just go with the flow now. So Charlie, the next question I wanted to ask to you. So please feel free to first introduce yourself. But just what we see is that the U.S. has been a big driver, and the U.S. capital has been a big driver of the data center investments in general across the world. And we're talking about 5 gigawatt of capacity there, but also significant amount of investment, not in the U.S. as well, but across the world through the U.S. investors, which is happening everywhere. And as the industry is moving forward, what do you think is the role of local investors and ensuring that this super strategic sector is growing in the right manner? So
yeah, thank you. So after all, this is a panel about foreign direct investment, so that's what we'll talk about. But first, my name is Charlie Evans. Until very recently, I was introducing myself as Charlie Evans at Greenhill. I'm now Charlie Evans at Guggenheim, which is a whole other story that we can get into. But essentially, I'm very excited to be joining an investment banking institution that has a very, very strong track record in data centers and in digital infrastructure, not only on the M&A side and on the capital raising side, but also in securitization and debt financing. So that's where I'm coming from, as a finance professional. And I think this question is really a question about capital flows across the world, and where most of the capital is coming from today that's invested in the large data center businesses is the US. And I think the challenge, there are multiple challenges that this industry has to face from a capital perspective. The first one is what Vincent mentioned, which is that the quantum of capital is going from kind of stratospherical into space. Because ultimately the amount of demand for megawatts is growing at that pace. So I think we've already seen examples of developments that on their own go into the kind of multiple billions of dollars. And most of the large data center companies of the world today are needing to answer the question of how do I find $2-3 billion a year in order to fund the growth that customers are putting in front of me. And so far, the answer has often come from large US financial institutions, which are typically aggregating capital from savings institutions like pension funds from across the world. But I think the other challenge that will need to be faced in this industry is that governments and also people and professionals are more focused on having more control over where the data sits, and on having kind of domestic investors investing in domestically strategic sectors. And we've seen this sector become defined as domestically strategic more and more in more countries. I mean, we're just talking about FDI approval processes, which can be lengthy, and I don't think we've hit a hurdle yet where an American investor gets turned down. and I don't think it makes sense for us to hit that hurdle because at the moment there isn't always an alternative solution. But there are savings institutions outside of the US that can make these investments, and I think what's happening, and what will happen more and more, is that institutions like pension institutions that you refer to, Vincent, will either develop the kind of internal capabilities to make active investments in digital infrastructure, because ultimately they hold a lot of the capital that's required to do this, or will find new structures. And I think the finance community as a whole is going to have to be creative and also be incentivized to be creative around finding new structures to fund the growth in digital infrastructure in the coming years, because ultimately that growth is stepping up to a new level, despite all the challenges that the macroeconomic environment poses to us. So long story short, the situation today is a lot of the big pools of capital are being managed out of the US at least, and probably coming from the US, which is a very logical place for us to be. But over time, you would expect local capital to find ways into local digital infrastructure institutions, just because of the strategic, kind of national security strategic nature of the business, and because the quantums of capital that are being required are increasing, the rationale of having an ability to deploy that capital in an active way for local institutions makes more sense.
Yeah.
So I hope that was not too much of a ramble.
No, that's great. I think the local investors need to take a little bit more risk to get there, I think. But Andrei, would you like to add more on this?
Sure. And again, by way of background and introduction, I head up the digital infrastructure practice at Nomura, which is a Japanese investment bank. And we focus and work with both companies looking to raise capital as well as investors looking to deploy capital in the digital infrastructure space. To add to what Charlie was saying, I think the reality is that it's absolutely right. The industry is extremely capital intensive, and I think investors that want to invest in this space need to tick 3 boxes. One is the availability of financial resources, and I think it's only one element of the 3. The second is around their comfort around an understanding of the sector. And I think while the high-level dynamics of the sector are evident, it's clear that there are many factors and parameters that investors need to understand if they are to invest substantial amounts of capital here. And 3, it's about the risk appetite to fund those multi-billion deployments, right? And in many cases today, the investor appetite across all 3 parameters that I just mentioned is just simply not there. Unsurprisingly, given where the trends originate from, a lot of the investors who have appetite and who tick the boxes, the 3 boxes that I mentioned, are coming from the US. They have a US background, and they move confidently in their investment decisions. You look at what happened around data 4 situation, for example, just recently. Ultimately, it was a North American investor with experience in the data center space, with experience of pricing these type of assets that got comfortable and got the deal done, relative to, let's say, some of the other maybe European investors who were a bit more cautious in their approach. So I think it is a journey that local investors are going to go on, and I don't think one can argue that in every situation, local investor is necessarily going to drive the investment in the space.
Michael, would you like to add anything?
Well, maybe some brief introduction. I'm Michael Suppan in our Deutsche Bank's infrastructure and energy financing platform. So we're a global financing team looking at digital infrastructure. So clearly focus today is data centers. We do towers, fiber, and other digital infrastructure, as well as broader energy and other infrastructure solutions. So it's I guess on the panel today, taking the views from the credit side, from the financing side, as Vincent mentioned earlier, there are large these are large multi-billion transactions and large multi-hundred million greenfield projects that we are looking at in this space, and so 50 to 70% or so of the capital structure is usually debt, depending on the risk appetite. And so I think some of the trends that have been mentioned before on the equity side, of having to sort of educate additional liquidity pools and opening this up from I guess at least in Europe a very much smaller scale, if I look back 3, 4, 5 years ago, to where we are today, a lot of inbound from infrastructure funds, credit funds, European project finance banks that we are educating in this space to raise additional liquidity here. So I think some of the trends that were mentioned earlier on the equity side fully apply on the debt side as well.
And indeed, there is a lot of changes, and therefore a lot of education is required across the board. Talking about that, so everyone is wondering, where next to invest. I mean, everyone knows about tier 1 markets; they're still growing great. But what else? Where else investors should look at? Michael, would you like to start?
Yeah, again, maybe taking the financing perspective. Ultimately, as a global business, we follow our clients and usually our clients, the large operators in this space, I guess, follow their clients. So where is the hyperscale demand, new zones being opened? And I would say, if you look at the location, clearly FLAP in Europe continues to dominate. If I look at our own book, where we do most of our financings, that is throughout FLAP. I would say not FLAP D, because Dublin is clearly very much constrained at the moment. But we see, I guess, on the decision on the location, it's very much driven similar to other infrastructure project on. We've heard a lot about regulation earlier, stability of regulation, regulatory incentives, smoothness of permitting processes, where we've seen huge delays on our greenfield projects in some markets, availability of power. I guess we're going to talk about sustainability and sort of efficiency in a moment, but that's clearly a key driver for some of the investment decisions, so access to any of the power, telecom, other utilities. So I think that, as an example, we have done over the last 2 years a lot more in the Nordics. Clearly there's demand there, but a lot of the PUE, cooling, efficiency, power availability, renewable energy availability, I think clearly supports some of those markets. And then I think it's going to be driven by a sort of appetite on the financing side. So if we talk about Africa, there might be a lot more, but clearly there isn't maybe the risk appetite there yet on the financing side, same in some of the Eastern European markets. So I think for now, if I look at locations, I would say Nordic tier 2 and Southern European tier 2 markets is probably where we see most additional activity at the moment.
Yeah, we're going to go with Charlie next.
Yeah, and I think the tier 2 markets in Europe are becoming more and more the same dynamic as the flat markets a few years ago, where they're filling up very quickly. There's a lot of competition to develop, and the players that have an existing presence and existing expansion have a stranglehold on the market. It's not the case to the same extent as in the flat markets, but it's still very competitive and difficult to be a new entrant. So from an investor's perspective, what does that mean? That means if you want to enter like a Madrid or a Milan or a Geneva, Zurich, then you're probably ending up paying for an incumbency position, which has value, but also comes at a price. Whereas the other the next level beyond tier 2, which we can call edge or we can call regional, I think is a very interesting place to be. I think there's less competition, although there is competition there. But you fundamentally have markets with enterprise ecosystems who, from the enterprise perspective, don't need to be in FLAP or in the capital city. So think kind of the second, third, fourth largest cities of the big European countries. And in those markets, sometimes there is a data center ecosystem, like Manchester, but sometimes there's nothing. And in those cases, I think that's an interesting place to invest, and I think it's a place where we're just seeing the beginning of a real investment trend. And then the only thing I would add is on the emerging markets front, having done a little bit of work in a few emerging markets, you often have, the commercial dynamics are often fantastic, so undersupply, a lot of growth, a lot of digital demand, a trend of leapfrogging to the latest technology, which means you don't have to replace kind of legacy technologies. And then usually the challenge is to do with macroeconomics, so currency fluctuations and inflation, which can make it very difficult to operate and difficult for international investors to get comfortable with the risk profile that just holding the local currency comes with.
Yeah, we'll try to prevent doubling up too much, but echoed comments on tier 2 markets. They are being, it's not a secret that we're sharing there, so there is demand and so pricing is going up there, which makes it more challenging from a risk-return perspective. I did mention the edge, and some of those use cases still need to develop, and it's not easy to build a more, let's call it metro, micro, edge type ecosystem, because it's very small DCs, it's expensive to operate and to kind of build up that ecosystem, and you've got subscale in the beginning, so that's not easy. But there may be other entry points, doing partnerships with people who are already on the ground in those geographies. So I think that's an interesting one, maybe not for today, but fast forward 3-5 years, that will be very interesting, I think. Other ideas were part of a broader ecosystem. If you look at data centers, we're investing across the piece into fiber connectivity, so that's an area which is adjacent, which is, yeah, I'd say more mainstream. It's probably not for the highest returns, but it's still growing with data connectivity or data center connectivity growing. The other one to throw in, it's probably a bit more left field, and I'll be kicking against the shins of a lot of infrastructure investors. But we are, as Morrison & Co, we're always quite early trying to identify those high growth areas. And so where we are looking is, yes, you have the infrastructure, but are there software layers on top of the infrastructure that are actually so valuable and embedded in the way of working that it's very good, sticky business, high value add, and so you can extend your investment thesis across multiple, call it, or vertically integrating the different value layers. So it's also an interesting bit of a differentiated strand of thought we're exploring.
Andrei, anything?
I'll take a slightly different perspective, and maybe sort of broader than Europe, even though it's always exciting to talk about tier 2 and tier 3 markets and what's happening there. But I think a significant part of the world's population is actually in Asia. And there is a lot of investment happening in the data center space in Asia. And I'm not going to talk about China and in India and Japan, but tier 2 markets, I cannot avoid tier 2. Tier 2 markets in Asia, places like Indonesia, places like Malaysia. You look at Indonesia, it's 270 million people, and there are barely any major data center players present there today, so there is a huge opportunity there, there is potential both for cloud players to build up their presence there. That is what we see happening already, and data center players are there to facilitate their growth. So I think there is definitely scope in some of those more emerging Asian markets. I think that's one. Two, if you look again slightly beyond Europe, and you think, okay, Africa is interesting. The reality is, from the cloud perspective, you have South Africa, you've got Nigeria, and then you've got Kenya, and then depending on your risk appetite, that's where you go and how ESG friendly you want to be as well. So I think Africa is interesting, but the space today is quite well covered. There are established players in most of these major markets, and question mark around how much demand is there given the broader macroeconomic trends in the region. Maybe, again, debatable, is that point around Middle East, or whether there is actually more interesting market opportunity in the Middle East, given, again, macroeconomic and socio-demographic profile of those countries. I think it's could be the next frontier of investment.
Thank you very much. So this will be the last question given the little time that we have. I wanted to just touch up on the resource constraints related to building the data centers that are required for the compute needs that we've been talking about, AI, edge, and everything that actually says that we will need to build more. But obviously, and locally sometimes resources are scarce. So how can we manage that? What are the actions that different ecosystem players need to take to make sure that we can manage the growth sustainably?
I think, if I start there, I think we will see a lot more integrated solutions, and we mentioned Dublin earlier. I think given the grid constraints there, we do see that already, that people are not just looking at the data center, but really at the sort of value chain and essentially building their own power plant, essentially, and or sourcing renewable energy or energy themselves because the grid is not available. So I think from that side, from the whole sort of vertical integration on the power side, power supply side, I believe you will see more of that, not just in Ireland. And then also on the other side, on the sort of efficient cooling and what to do with the excess heat, feeding it in or building part of a district heating network. We've seen in the Nordics fish farms being heated. So I think looking at it more holistically, at least on our side, whenever we provide new financings, they are assessed against sustainability criteria, and that will become, so the reporting requirements that have been mentioned earlier in the regulatory session will become more important, and so looking at really holistically will be a key driver also to source the financing.
Vincent, would you like to add anything to that?
What I think will believe, at least for part of the landscape, and I'm fast forwarding quite a few years, but much more, again, it goes to edge as those use cases develop, much more localized, smaller DCs. Yes, you'll still have the mega hubs, but smaller local DCs with a local solution on energy generation and then reusing the heat in the local communities. I think it must be much more of an, on your point, Michael, much more of an integrated solution. I do also think I think that needs to happen over time, that will happen, but it does need government support as well, where now they're saying, oh, you can't build in Amsterdam or you can't connect to the grid in Ireland, which is quite short-sighted. So what happens then, that those loads go to the countryside, there's other issues being created there with knock-on effects. So you need to take a much more holistic solution to the challenges.
Charlie?
Well, I guess 2 points. I guess there's an extent to which the development can go where the resources are, which is a very short way of introducing how the Nordic data center market works. And I think that when you have much larger and larger increments of demand coming through, you will see examples of them going to markets like the Nordics rather than the flat markets. But and again, everyone will know there's an extent to which that's impossible. And then you're looking at your joined up energy solutions, and there are investors today who have the capabilities, and many investors who are deeply invested in the data center market and deeply invested within the renewable energy market, sometimes through different pockets. And we're seeing a lot of people in our line of work where we're kind of noodling how you can combine the two, because there are clear sort of synergies and partnership opportunities between the two.
Andrei, any burning points around that?
Not really. I think I would just echo the points made earlier, that it's all about partnership approach, and I think I'm sure lots of mistakes have been made in the early days of the sector development, and there is probably a more rational approach trying to basically solve for interests of local government, interests of data center operators, and also the broader population in the country and the regions.
Thank you very much, everyone.